All right, welcome to this continuation of our tutorial. And now we are updating ourselves on the direction we are expecting from the market. So back to our hourly time frame, 1 hour time frame, we have seen the first bullish impulse after the market made a complete correction move to our projected price at 1.2187. Now this is the first bullish impulse occurring down here, and this confirms with us that we can now start looking for bullish entries, and until we see a reason to look for bearish entries, we'll focus on looking for bullish entries. So now this is the first appearance on the 1 hour time frame, but if we switch to other time frames, we will see two or more appearance of the reason to go bullish. So for 30 minutes time frame, we have seen also one appearance here. That was the starting point of the bullish. This was completed in 30 minutes. The first bullish impulse was completed in 30 minutes. And now we are on the second level, looking forward to having this and the next candle continue in the bullish direction. That's for us to expect that will go bullish in the market. Now, if we switch also to the 15 minutes time frame, we'll see more confirmation levels because the stop loss levels are now going up. So if you look here, we have the first bullish impulse occurring here. So we have the bullish impulse occurring here. So this was the first level. Then it was terminated here. And now we have the fragmented bullish move also, which means that this is the second level of bullish opportunity. Then we'll have the entry candle, which was supposed to be the third candle. Of course, as our rule says, that the entry candle always or most often goes converse to the entry bias. And then we have also the fourth candle, which also turns out to be the last entry candle. So you can see that the fourth candle, in this case, double entries moved, and for 15 minutes, the entry on the third and fourth candle is still running. Where does the stop loss come in? Stop loss is 10 pips below 1.2198, so 1.2188, and the market has not come near that. So the current entry running for the 15 minutes time frame is the entry on the third candle 1.204 and 1 point on the fourth candle 1.2200. So now this is still running. So this is the current bullish entry running, while the previous bullish entry on 15 minutes has been completed. So this was a successful entry. For the first time the bullish entry started. That was a good opportunity. You would have seen that this entry was terminated on the fourth candle. So after entry, that left with neutral, because of course that entry was terminated. It didn't hit the stop loss, but based on the third candle entry for the first impulse, there was no real profit there. So coming back to reshuffle for another entry. This was the third candle, which was the main entry candle, and of course it acted as expected, went down first against the entry bias, which was supposed to be bullish. It closed bearish, and that gave us double entry opportunity where the fourth candle becomes an entry candle and the last candle also. So if we are looking for the most recent bullish entry prices to trade, they are for the third candle 1.2204, and 1 point for the fourth candle 1.2200. So that's 4 pips spread between that, and then now the entry is what is running currently, and of course is in profit. The stop loss is 1.2188. The market hasn't come near to threaten the stop loss. That's also to confirm that there is a bullish opportunity right now in the market. And we are seeing that if this closes as an impulse, then we'll be looking for exiting this position only when the impulse is terminated. But if this doesn't close as an impulse, it means that this position will still be held until there will be a bullish impulse that gets terminated. So currently the only entry on 15 minutes time frame that is currently active are the two entries here, 2204 and 1.2200. So that is what we have as an update. Then let's go to 5 minutes and see where we have. Okay, before then, let's mark this entry point so that it will be easily referred to in a subsequent demonstration. Okay, so first entry price, we are using the arrow line to mark it because that is the third candle and it's still running until we see an impulse that's terminated. The projection is upward. For that, then we have explained when you should have double entries, and that is here. When the third candle goes contrary to your bias, entry bias, then you have to enter double entry on the fourth candle. So that is what we have here. So these are the two entry points, and these two entries are still running currently in profit. So let's calculate the number of profits, amount of profit already covered. 2214 from the first entry, 2204, that's already 10 pips, and here 14 pips. So put together, that's a total of 24 pips put together for the two entries running simultaneously. So that's for the 15 minutes time frame. Let's go to the 5 minutes time frame to also look at this. Before then, let's adjust this to make sure it doesn't appear on the higher time frame. That's part of what, and this also, so it doesn't appear on the higher time frame. So now let's go to the 5 minutes time frame again and see where we will have entries ongoing. So we have entries on 15 minutes ongoing, and let's look for where we had entries on 5 minutes. Okay, so looking at the total move here, if you are not aware of our trading rule, you might get confused when you see candles like this. You feel nothing is happening. Because of our trading rules, we see everywhere something happened, starting from back when the market was on a bearish move. Okay, so looking back here, let's see how many bullish entry opportunities we have spotted. This was the last bearish move that got terminated here. So after the termination, we have we are looking for bullish opportunities. Of course, the first bullish opportunity that is significant is when we say the exit line is broken, and that was on this bullish candle. This was a bullish candle that gave us that breaking of the exit price line, which gives us the stop loss level to be at the candle. Okay, so the stop loss level for this breaking of the exit price line will be below here. So let's mark that for reference purpose. We have to mark that there was an entry opportunity that was created because of the exit price line that got broken here. So let's put that for only 5 minutes so that it doesn't interfere in the larger time frame. Okay, so now we had the first entry for the exit price line that got broken here. This candle was the first entry, and based on that, this entry would be held until a bullish impulse appears that is broken. So this was where the exit came, because up from when this entry was taken, there was no bullish impulse that got terminated until here. So it is taking that this entry was held up until this point. So how many pips of profit was that? Let's draw an indication of that move that got completed. So it moved from here to here. So that was the first bullish move that went in to profit on the 5 minutes time frame. So that was a completed bullish move based on the breaking of an exit price line. So that's done. Let's look for the new or most current entry level on 5 minutes that is running. Just like in the 15 minutes, we have two entries that are running based on 15 minutes entry levels. Now on 5 minutes, let's say after the exit here, we'll look for the new bullish move and know where to place our exit or stop loss as the case may be. So now we had a bearish entry here that formed. Since now we are not looking for bearish entries again, what we are focusing now is not entry opportunities for bearish impulse, but rather entry opportunities for bullish breaking of bearish impulse or starting of bullish impulse. Those are the two things we are looking at. So now for the first thing here, this was the bullish breaking of this bearish impulse. It gives us a new exit price line, which is at 1.22010, already marked here. Then we have the first candle following that principle. The first candle that opens or breaks the exit price line will become our entry candle, and that will mean we have to mark the exit candle for our reference for the stop loss. So now if you mark 1.2198, the stop loss will be 1.2188 for this, and this will be the entry candle. All right, so 1.2206. So now we are looking for an impulse that will break, that will be terminated for this entry here to be reconsidered. So otherwise, this entry is still active. So let's place the entry running to show that that is the current entry on 5 minutes running and has not been it has not been exited. So the current entry price and the projection is bullish. So we have first entry in 5 minutes for bullish that was successfully exited. Now this is the second entry for bullish buyers to show that the direction currently is now bullish. So in 5 minutes, we have the current entry running is at 1.2205. So if you look at the time frames we have looked at, we have seen three entries that are running. We saw entry on 5 minutes, on 1 hour. We saw entry on 15 minutes, and we've seen entry on 5 minutes that are active. So we have three entries, or in two on 15 minutes still active, and